you are in control of interest rates. Let's take a quick look at the end of May, look at how real estate moved and what we're expecting going forward, and a little insight as to why interest rates are stubbornly high and how that might affect you if you're thinking about buying or selling a home. These data points are taken monthly, so as of May 1st, new listings climbed in April, active listings climbed in April, days on market have begun to taper off, and their decline is coming to an end, which is not great news. I'll explain that in a minute why. Months of supply have begun to climb, which is also not good. However, price per square foot seems to be tapering off a little, but still somewhat stable. Check out these graphs below. New listings climbing, active listings climbing, days on market beginning to taper off. Why this is not good news is because we want days on market to be lower. That means things are selling faster. But in this case, days on market are tapering off, which is the beginning of the climb toward the end of the year, which you should be expecting if you've watched all my market update videos to date. And lastly, price per square foot, as you see here, is relatively stable, although one might deduce that it's somewhat tapering off as compared to last year's peak. Now, interest rates, you may want to know, why are interest rates stubbornly high? I thought Trump was going to lower them, etc., etc. Well, he tried to raise tariffs to raise income or revenue for the country so that he could go and spend that money to do other improvements that he wanted to do. However, you will see here that interest rates are stubbornly hanging around the 7% mark. This is the survey from Mortgage News Daily, and you'll see over the last week or so, it's been 6.99 up to 7.08, down to 6.98 today. So we're hovering around 7. The point is that when the tariff war began and Doji did not succeed in cutting as much costs as it would have liked because they needed congressional approval, well, what happened was the government debt is continuing to grow and our revenue is not growing as fast as we would have liked it to grow. And so Moody's recently downgraded the United States sovereign debt credit rating from AAA to AA1. So AAA is the highest credit rating any entity can have, according to the credit rating agencies like Moody's and S&P, which means they have fantastic ability to repay their debts. So every time they drop it down a notch out of their 21 notch rating system, it means that entity has a little bit less power to repay their debts. Anytime you lend money to someone and they have a little bit less ability to repay you back, you would probably want a sweeter deal to make up for the extra risk. So in this case, the United States just became technically slightly more risky of an investment to all of the bond investors in the world. Now, it's a very minor change from the highest to the 20th highest out of 21 steps, but it is nonetheless a slight change, and therefore investors have a lower appetite for US debt, meaning when they buy Treasury bonds, savings bonds, they want a higher yield to pay them back for the extra risk that they're taking on by lending money to the United States. As a result, the bond auctions had higher yields, which causes the debt markets to have higher yields, namely the 10-year US Treasury, which causes mortgage interest rates to rise because most lenders price their mortgage rates off of the 10-year US Treasury. I hope that mouthful helped you understand that basically US credit a little bit lower, interest rates a little bit higher. So with all that said, if you are buying in today's market, I don't see any magic bullet right now to make interest rates come down drastically. The way rates come down and up is based on inflation, which is based on your spending and my spending. So if we choose to spend less, inflation will come down and rates will come down. If we choose to spend more, inflation will go up and rates will go up. So that means you are in control of interest rates. You can choose how to spend your money, and that will affect inflation, which will in turn affect interest rates. I hope this was helpful. If you're buying in today's market, expect rates to be in the 6 to 7 range. I have been watching this range for the last year. You see this graph is last year, and it looks kind of range bound to me, 6 to 7. If you look at 5 years, this is way back when it was low, artificially low during COVID. It bounced up here and it's been hovering between 6 and 8 ever since. I do think 7 is a psychological barrier. Most people really start to second guess themselves when rates go above 7. So I think that tends to naturally slow things down, because when things hit 8 back in October 2023, it really slowed down. And what happened was mortgage applications slowed down so much that rates, boom, just came right back down to where they should be. And once they got below 7, people jumped right back in, and it went over 7, and then people slowed down again, and then it came back down to 6. Then people jumped right back in, and then it went back up to 7. And so we're kind of hovering around. In my opinion, 7 seems to be the equilibrium, the area of equilibrium, where people put the brakes on when it goes above and put the gas on when it goes below. So I hope this was helpful for you. If you're looking to buy, run your budget. Call us if you want us to help you use a mortgage calculator, and we'll help you figure out what a rough payment might look like and how that compares to your income scenario. And if you're thinking of selling, this definitely affects you, because rates are going to affect the demand from the buyers. We do have a couple tips and tricks for both buyers and sellers, namely a $20,000 grant with 0 PMI, no strings attached, for properties in certain locations. So if you're looking to buy, ask us if the location that you're looking at qualifies for that grant. And if you're looking to sell, ask us if the location you're thinking about selling in qualifies for that grant. All we need is an address. We'll run it by our lender, see if it qualifies for the grant, and that helps us market your property and get better offers and help you sell the home for more money, and hopefully in faster time and with less of a headache. I hope this was helpful. Please reach out. Let me know your thoughts in the comments. Feel free to share this or save it, and just reach out and let me know what you need. God bless you. Talk to you soon.